How's it going, everybody? Welcome back to the Invest in Wealth channel. Today's video, we are going to be doing a portfolio update. We are up quite substantially from the last portfolio update here, almost $10,000 from my last video I made 10 days ago. The market has been performing very well. Kind of the fear of that the Fed is gonna raise interest rates kind of went away. Company profits are turning out better than expected, and the outlook on 2024 is looking brighter and brighter as we move forward into the new year. We are probably gonna see a rally in December as we normally do. Stocks are hopefully gonna continue to rise like they are following into the new year. And then normally in January, stocks are a little bit rocky, so there will be some more buying opportunities there. I'm very excited to get that extra $7,000 worth of tax-free room, as well as the extra $8,000 for my first home savings account. But without further ado, let's check out how my accounts fared in the last couple weeks here, starting off with the first home savings account. In the last week, we are up 2% or $123. In this account, we own a mix of railways, a little bit of Bank of Nova Scotia, and over half in the S&P 500 index. Time horizon for this account is fairly long, maybe 3 to 5 years, but in the first home savings account, generally you should be on the more conservative side with your holdings, but I'm kind of taking a little bit more of a aggressive longer term approach. Not really too worried about what is going to happen in this column here, as this account I am mainly just using for that nice tax deduction of $8,000. So that's almost like a 30% return right off the bat when you first deposit $8,000 into your first home savings account, just because that amount is tax deductible on your taxes. Plus everything you make in this account is completely tax-free, which is a great benefit as well. Let's jump on over to our tax-free savings account. So last month we are up 4% or $1,125. In the last week, we are up 1% or $449. This account, I own quite a bit of the oil and gas stocks here. We have Pembina Pipeline, which has been doing very well for us. The energy sector has been on the rise as of late, so as the material sector. We have Enbridge. This stock has gotten beaten down this year, but it has bounced back a little bit. I definitely think there is lots more growth to be had with Enbridge in the future. Then we have our REIT that we are bleeding on quite a bit, but I'm not too worried in this high interest rate environment. That is very common. Lots of REITs are getting hit hard by these high interest rates, but we are seeing mortgage rates. Some banks are lowering them quite recently. Not by a huge amount, but it is a good sign. Hopefully in the first half of 2024, we do start to see mortgage rates go down, and then there'll be a huge spike in the REIT sector. This is probably one of my favorite sectors to be adding into, just because of the value is insane looking on the long term. Moving along to TXF, this is the largest holding in my overall portfolio. This is the top 25 tech companies in the US, and it as well is a covered call. So we are getting that nice income as well, which is, I think it's around 9% in this ETF. And then we have a little position here of VFV with that $7,000 worth of contribution room. I will be definitely adding the majority of that into VFV, as that is perfect for growth, and all that growth will be tax-free in this account. Let's move on to my RRSP. Last month, we are up 4% or $354. And in the last week, we are up 3% or $340. This account I don't really look at too often here. We have just one share of CNR, few shares of Enbridge, small position in HYLD, and as well the majority is in our TXF position. I kind of neglect this account just because most of my retirement savings are just held with my company pension. But let's jump right into the big position here, big account here, which is the non-registered. We are looking on the Canadian side. So 1 month we are up 3% or $2,565. And in the last week we are up 1% or $636. This account we got a bit of everything here. We have some REITs, utilities, banks, insurance, kind of the whole works here. One sector that I really like right now is the utilities sector. In my previous update videos, I did sell half of my Great West Life position and I added Canadian utilities, and that was a great move. We are up 4.74%. There's definitely some more value to be had in the utilities sector right now, as well as the telecom sector. Those two sectors in the market get hit very hard when there is the interest rates are high, just because they tend to carry a lot of debt in their books. But these are great buys as well. I do see some more value with the Canadian banks. Hopefully in the new year, they are kind of more stable now. We did see a sharp decline about a month ago. They were at 52-week lows. We did have a nice bounce back. Definitely not back to where they were, but it is nice to see them recover slightly here. Now let's look at our US side. So last month we are down 5% or $233. And in the last week we are up 1% or $40. So this account we have mainly tech here. We do have kind of a big speculative position with Tesla. This I just mainly bought just for fun. I haven't really seen any ETF like this in the market. It's very risky. They pay out like a 58% dividend yield just because they do write options on Tesla. So it's very volatile. Definitely don't recommend buying into this if you can't afford to lose what you put in. Well, I just thought it was fun just to mix up the portfolio a little bit. So let's talk about, I don't normally bring this up, but crypto is extremely hot right now. I've just mainly bought this just for fun in my portfolio. And our Solana position, we are actually up 217%, which is nuts, honestly. That is pretty crazy to get a gain like that. Does not happen very often. It makes up such a small percentage of my portfolio that it's not really even noticeable, but it is very cool to look at. Over the last month, we were up about 109% here. So that is very, very cool. Not too sure what I'm going to do with this position of Solana yet. I might trim off a bit of it and just use it to maybe add to my tax-free or my first home savings account in January. Not too sure, but it is definitely fun to watch this climb here. This is just a crazy chart. But yeah, that is what is making up my $147,630 portfolio. Now let's just hop right in and check out my recent activity. All right, we are in the activity screen here. It's not very exciting. As you guys know, I'm not really contributing any new money into the portfolio until January, just because I don't really want to add into my non-registered accounts, kind of building up my savings. And then I'm going to be deploying some cash in the portfolio for the first home savings account and for my tax-free I don't mind keeping cash on the sidelines just because I am earning 5.75% on my cash, which is great. But let's just hop right into where we left off in the last video here. So starting off the month of November, we did a market buy of Royal Bank here on November 1st. Then we got some dividends in the portfolio November 7th. We got our monthly dividends from HMAX of $25.74. Another dividend of HYLD, $29.40. Dividend from HYLD, $1.56. There's some things going on with stock lending here in my portfolio. I'll keep you guys posted on that, as I am lending out some shares of TD and Bank of Nova Scotia. I have no idea how much I'm gonna earn, but I'll definitely keep you guys posted because I'm very interested in that. Always nice to just get a bit of extra income in the portfolio. End of last month, we did get some dividends here from TD October 31st and of CP. I'm going to show you guys how much we've made in dividends in the month of October because I have not done that yet. We will go hop onto my spreadsheet. We're going to check out which companies pay me out in October, get the final total, and then see how much income we generated in 2023 so far, and then see how much money we have generated in dividends from the time I have actually had my portfolio, which was the start of 2021. So let's just hop right into that spreadsheet. Alrighty, so in the month of October here, we got paid out in my tax-free account a total of $24.85. That was from 2 companies. In my RRSP, we only had 1 dividend from HYLD. That turned out to be a total of $1.56. In my personal account, this is where we get most of our income. We have received $669.32 in total. And then in our first home savings account in the month of October, we received $31.14 from those 3 companies there. So let's take a look at the grand total for October. It is $726.87, which is great, completely passive income. I'll take it. In the month of October, this is kind of in our portfolio, we have 3 different time periods, I'm going to call it, about when we get paid out in dividends. So October, this quarter, it is our second kind of highest payout. November is our lowest, and then December is our best. So hopefully you guys understand that. But yeah, this is our second, kind of in the middle of how much we get paid out. I'll give you guys kind of an example here. So October, that's our middle value of what we get paid out from our quarterly companies. September, that's our best quarter. And then August, that's our worst. So November is going to be kind of similar to that. But yeah, hopefully you guys kind of understand what I'm trying to get at here. But good month in October for sure for the dividends. Let's see the yearly total. So from January 2023 till now, we have received $7,728.69. So that's from January to the end of October. Let's compare that with last year to just kind of see how on track we are and kind of what the difference is. So we've made basically the exact same amount as we did all year last year, from comparing that to this year of just January to the end of October. We still have 2 months left. December will be a big month for us again, probably around $1,500. So that is awesome. We have made quite a bit more in dividends in 2023 than we have in 2022. Now let's scroll all the way over to the first year of my portfolio. Started this January 2021. So all in 2021, we made $2,325. So this is just showing kind of the power of compound interest. As you scroll down farther and farther, the dividends we've received just keep growing and growing. I love compound interest. I love dividend investing. And then we look at the all-time value, $17,920.73. This kind of just blows my mind. It's just wow. Like, how you can make your money work for yourself is unreal. I'm just absolutely fascinated with the concept of compound interest. I'm only 20 years old, so think about it. In like 20, 30, 40 years, just this thing is just gonna keep snowballing and snowballing and snowballing. Hopefully you guys stick with me through that journey. But let's get out of this screen and let's just hop back right into my Wealthsimple portfolio here. I do talk quite a bit about sectors making these videos, just because I believe diversification plays a huge factor in the overall return of your portfolio. I'm going to share with you kind of how the sector breakdown is in my portfolio here. So starting off from the highest percentage, which will be the tech sector. So my portfolio is 29.7% invested in the technology sector. Following closely behind is the energy sector, companies like Enbridge, Pembina Pipeline. So that makes up 25.2%. Financials, those are the big banks here. Financials makes up 23.3% of the portfolio. And then, so those are the main ones. That's a very big weighting. It's roughly 30, 25, 25. So that is a huge percentage. So my portfolio is heavily invested into the tech, energy, and financial sectors. Moving along to the communication sector. So that would be companies like Bell, which we own some shares of. So communications makes up 7.1% of the portfolio. Then we have the industrial sector, which is our railways, which is 5%. Then we have the real estate sector, which is our REITs that we own, like Allied Properties. That makes up 3.7%. I definitely want to build on that sector just because that's pretty low, 3.7%. Next up, we have the utilities sector. So that's companies like Canadian Utilities. That makes up 2.2%. So definitely want to grow that as well. Then we have the healthcare sector, which makes up 1.6% of the portfolio. That is mainly just from this VFV ETF, as the S&P 500 is, there's a decent sized position for healthcare in the S&P 500. Then we have consumer cyclical, that makes up 1.2%. Again, that just comes from being invested in the S&P 500. Then we have consumer staples at 0.7%, and then materials at 0.3%. So it's super, super, super important that you're diversified across many different sectors. I'm honestly quite heavy in the tech, energy, and financials, but I don't mind taking a big risk having 30% of my portfolio in tech, as I am invested for the long term. I have a massive time horizon, so I don't mind these fluctuations here. Energy sector, I'll probably start trimming off a little bit of Enbridge here once it's back up above $55 range. The financial sector, I love. It is on a great deal. It's solid in Canada. Communications, I'll probably add a little bit more, and then the rest I've already talked about, but it's very important to make yourself aware kind of where each and every dollar is going into what sector, because it does play a vital role in the overall performance and efficiency of your stock portfolio. So it's very important to always just keep an eye out which sectors you're heavily invested in, and then which sectors you're kind of lacking in, and just constantly rebalancing when there's kind of a drift within your target allocation is very important. Well, I think I've pretty much covered everything I wanted to in this video, guys. Hopefully you learned something new that you didn't know before. I do really love making these portfolio update videos for you guys. So if you enjoyed, please leave a like and subscribe. Thank you guys so much for watching, and I'll see you in the next update video. Thanks. Bye.